day everyone, thank you for joining me. I'm Tamara Kukshinovich and I'm going to take you through Attaqq's interim results. Attacq is a real estate investment and development company that is diversified across sectors. The company has exposure to the retail, office and mixed use, light industrial and hotel sector. Of this exposure, 59% is concentrated in Waterfall. The group is also diversified across geographies, which include South Africa, Ghana, Zambia, Nigeria, as well as Western, Central and Eastern Europe. The exposure to Western, Central and Eastern Europe is attained through the investment in Mass Real Estate Inc. Mass is listed on the Johannesburg Stock Exchange and Attacq's 22.8% shareholding in the company is worth 330 cents per Attacq share. South African property fundamentals are deteriorating because of the depressed economic environment and lack of growth drivers. Trading densities are falling, retailers are contracting floor space, and tenant failures are growing. However, Attacq has a 65.7% of green elements based on the PGLA. This attracts tenants. The rest of the African countries are feeling pressure due to the low economic growth, local currency depreciation and policy uncertainty, which results in tough trading conditions. On the positive side, property fundamentals in Western, Central and Eastern Europe are more stable. The group recently converted to a REIT from a capital growth fund. As a result, it has declared its first interim dividend of 40.5 cents per share during the period. The forward dividend yield of 6.8% is below its peers and the sector average of 9.35%. We believe that distributions will grow due to the Waterfall City densification, which is demonstrated by the group's high trading density growth of 6.9%, where Mall of Africa had a 12.7% increase in trading density. Moreover, Attacq's trading density is well above the market average. Management expects the total dividend per share for the full year ending 30 June 2019 to grow in the range of 7.5% and 9.5%. The loan-to-value ratio of 36.3% is below its target of 40% and in line with its peers that have an average of 36.6%. Recently, the group disposed of the Akimoto Retail Center in Ghana. The proceeds will be used to reduce the group's rand-denominated debt. Attacq aims to make further reductions in its investments in sub-Saharan Africa and further reduce debt. We believe the share is undervalued, trading at a 44% discount to its net asset value, and the risks mentioned above are reflected in the price. We recommend an overweight exposure relative to the SA All Property Index. Net rental income increased by 19.9%. Interest paid increased by 12.4% and interest received rose by 35.9%. Distributable earnings grew by 9.6%, which was mainly driven by the good trading growth in Mall of Africa, the newly finished buildings in Waterfall, and the strong growth in dividends received from Mass. The company declared an interim dividend of 40.5 cents per share. Total interest-bearing borrowings rose by 4.4%. Gearing increased to 36.3%, mainly due to the payout of the full-year dividend in October 2018 and the impairments to the Africa investments. The weighted average cost of debt remained at 8.9%. The interest cover ratio improved to 1.8 times due to escalations in contractual rental income, together with an increase in the cash dividend received from Mass. Net asset value rose by 14.4% to 2,365.8 cents per share. In conclusion, we would recommend an overweight exposure relative to the SA All Property Index, which has a weighting of 2.7% in the counter. If you would like to place a trade, please speak to your financial advisor or contact the dealing desk. A comprehensive investment idea report on Attacq can be found on the PSG online trading platform. But before we end off, please take note of the following disclaimer. Thank you.